Hi, and welcome to this week's look back over the major stories that have developed in the markets in the last few days. Well, as ever, I'm afraid we're going to start in the UK, and we're going to have a look at the impact, perhaps, that Rishi Sunak, the new Prime Minister of Great Britain, could have on sterling. So Sunak, who was previously the Chancellor during the COVID period under the leadership of Boris Johnson, has been appointed this week as Prime Minister by MPs. Worth noting, there was no public vote whatsoever. But what does this mean for sterling? Well, initially, there certainly seems to be some reduced levels of panic and chaos. Most of Liz Truss's plan, Liz Truss, you may have already forgotten, was British Prime Minister for old 45 days. Most of her budget plans, low taxation, high spending plans have been reversed. Now, analysts at BlackRock, the world's largest asset manager, have said that the UK's financial soundness has definitely improved with the appointment of Rishi Sunak, but the damage has not been fully reversed. So what's been happening to the pound? Well, sterling against the dollar has actually done pretty well this week comparatively to the last few weeks. And we're currently looking at trading around the 115.7, 115.8 mark. 114 was seen as a key resistance level, so we're above that, which perhaps bodes quite well. Could we see a complete breakout of the bearish channel that's been formed in the last few weeks and the terrible run sterling did have? And will this improvement in the UK financial soundness be hampered by the fact that one of the first things Rishi Sunak has done has actually put back this sort of autumn budget statement by 2 weeks? We've got a 2-week delay now, which I think a lot of people aren't overly pleased about because they were looking for some further information, some further stability from that. Are we going to see less seesawing of the pound in the coming couple of weeks? Well, I think most people would hope so. But volatility still abounds, so make sure you're using your risk management techniques. Our second look back, we're going to stay with currencies and we're going to have a little look at the euro dollar and the fact that the euro against the dollar seems to be gathering a little bit of pace as well. So the euro formed a base and started a decent upward move above the 98.50 zone this week. A major bullish trend line was forming with support near 99.10 on the hourly charts, which seems to be holding with euro dollar currently around the 1.004 to 1.005 mark. An upside break above the figure was said to be the start of a revisit of 101.20. And in fact, further gains above that might send the pair back towards 1.20. So it looks like this little upward trend for the euro against the dollar and potentially a downward trend for the dollar is continuing. On that, let's have a little look at dollar against the Japanese yen. Now, that declined sharply after surging to a multi-year high at 151.94. And it looks like there may be a break below the key bullish trend line on the hourly chart near 150.4. But we'd be looking to see some major support around the 146.20. Currently, we're looking at trading around the 146.60 to 146.70 mark. So are we going to test the 146.20? We're going to have to wait and find out. Right, now we're going to turn our attentions across the pond and in fact to a slightly different market. We're going to have a little look at the big tech firms in the next couple of videos. Now, I think it's fair to say that big tech is currently being hit by fears of a potential recession. Last year, there was lots of caution around the US big tech stocks with lots of volatility to be seen. Now, that volatility seems to have shifted towards the currency markets in recent months, but that focus may be shifting back with news that Microsoft and Alphabet, you may know better as Google, they've experienced downturns in sales according to their latest reports, adding weight to the speculation that Western economies are looking at further downtrends and possible recessions. Now, Alphabet, say Google, has cut its advertising budget and saw a 6% increase in sales in the 3 months ending September 30th. Now, a 6% increase doesn't sound that bad, but that's the slowest quarterly growth it's experienced since March 2020. Microsoft have also come out and stated demand for their hardware and software in the same period has fallen. Now, sales did increase by 11%. Again, not necessarily a terrible figure. That's also its slowest revenue growth in 5 years. Now, on top of that, Alphabet's profits fell by 30% in the quarter. So I think it's fair to say fears of recession, reports coming out that aren't great, there's going to be some volatility ahead again for US big stocks. Okay, so our final video, we're going to stick with big tech stocks in the US, and we're going to take a look at Meta. Now, Meta shares were down 20% after the earnings report that's come out. Their profits have halved, and a small increase in users did not help the situation. In fact, we saw the lowest price in more than 6 years, approaching $100 per share in post-market trading. This is on top of the fact there was a published open letter from one of its largest institutional investors this week saying they should halve their investments in the metaverse. Not really surprised when losses from the development of Reality Labs in Q3, that's part of the metaverse, were equal to 3.7 billion US dollars. Now, that doesn't seem to be worrying Mark Zuckerberg quite as much, who's sort of saying, well, we've got to take this short-term hit in cash flow and income for the longer-term gains. But will this latest report strengthen the negativity around Meta that saw a bearish trend line start to form after this February's reports? Now, with Apple and Amazon still to come, keep your eyes open because big tech stocks are proving a lot of interest in the coming weeks. Good luck with the week ahead, good luck with your trading, and remember your risk management. That's it for now.